Alright everyone, welcome to my YouTube channel. Today we're going to be looking at the income and expenditure account for non-profit organizations. So in the previous videos that I've done and posted, we treated the receipt and payment account of non-profit making organizations. So what individuals or students need to understand is that the receipt and payment account is more like the cash book where you record all your receipt, that is every cash that you receive on the debit side and your payments on the credit side. That is in line with the double entry principle that says for every receiver there must be a corresponding giver. You all cash you receive are going to be debited while all cash payments are going to be credited. Okay, that is for the receipt and payment account. But in regards to the income and expenditure account, it's the other way around. All items of expenses are going to be recorded on the debit side of the income and expenditure account, while all items of income are going to be credited on the income and expenditure account. So we're going to go through this question that I have here on the screen, and also we're going to look at how to prepare this account. So let us go right in. So let us draw this. I'm going to be drawing the T-shape. So I have my income. Sorry, I'm going to be making abbreviations for that. Income and expenditure account. Okay. So here we have expenditure. So I'm going to use the ASP as expenditure. Okay. And here we have income. Okay. So let me draw that down. So let us have a naira sign. A naira sign here. Okay, and the value. Okay. Okay, so let's move on. So for expenses we have rent. So that will be on the debit side, rent, which is 5 million. So put 5 million here. So we're going to be taking the transactions one by one. So we have transport. This is an item of expenses too. So transport is an expenditure. So we're going to record that on the debit side, transport. Please kindly subscribe to my YouTube channel and also share the link to this video with those who you believe that can benefit from this tutorial. So what we're currently doing is that we are currently working on the income and expenditure account of a non-profit making organization. Okay, so we have transport, which is an expenditure, so that is 4 million. And also don't forget to click on the notification bell so that you can have access to any video or educational video I'm going to be dropping on this YouTube channel. Okay, so we have wages. So it's also wages. That is equivalent to 6,800,000. 6,800,000. Okay, so that will be on the debit side as an item of expenditure. We also have supplies or refreshment, because supplies, we make supplies, so we are incurring expenses. Supplies, so I'm going to just put supplies there. Supplies. Okay, supplies, we have for refreshment we have 8,500,000. 500,000. Okay, okay. We also have printing and stationaries. Okay, printing and stationaries. Printing. I'm going to put printing there. Printing. Printing, we have 3 million naira. 3 million. Okay. We have repairs. Okay, Now, for items of accruals and prepayments, you are allowed to record your accruals and prepayments in your income and expenditure account, but in your cash account or your receipt and payment account, you are not allowed to record any items or accrual and prepayment, because what we are dealing with in the receipt and payment account are basically cash transactions. Okay, so but in income and expenditure account, you are allowed to consider your accruals and prepayment. So let us look at this transaction: repairs. So for repairs for repairs so we have repairs here. We have the value as 1,200,000. And we also have accrued repairs. Okay, let's look at that. Do we have that? Yes, we have it here. That's marked there. That's 800,000 naira. So we have 1,200,000, 100 plus 800. Okay, 800. So that will give us 2 million. Okay, 2 million. So for salaries, we also have accrued salaries. So I'm going to put that here, salaries. So we have salaries as, this is the value of salaries here, that's 10 million. So 10 million plus the accrued figure outstanding that is due but unpaid, which is 2,200,000. Okay, so 2,200,000, which will give us, so this will give us 12,200,000. Okay, 200. Okay, so let me just adjust this, move this backward a bit so I can do some. Okay, now, so we have receipts. Okay, so all items of income will come to the credit side. So this is our debit side, and this is our credit side. Okay, so receipts, we have donations. Okay, donations, 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 donations. We have 6 million. We have refreshment. So the money that we receive for refreshment, so refreshment, we have 12,500,000. That's 12,500,000. Okay, so for tickets, okay, that tickets for meal or tickets for events. So tickets, we have 1 million. Okay, 1 million. Also, we have subscriptions. Okay, we have subscriptions. Where is that? Yes, we have subscription at the beginning. We also have subscription for the current year that is due. Okay, so we have subscription. So we call it subscription. We have, that is 18 million. 18 million. Okay, plus, so subscription that is due for the current year, which is an addition. some addition, that is 2 million. Okay, so let me just manage to write that here. 2 million, okay. So this will give us 20 million. 20 million, okay. 20 million. So let's do the calculation. Right now we've been able to solve this question, which is quite simple. And as we progress, we're going to be doing more questions. But kindly subscribe to my YouTube channel again, and also click on the notification bell so that you can have access to any video I'm going to be dropping here. And also share the link with your friends, your colleagues in school, those who want to learn accounting, you can share this with them. So what we have here now is that we have been able to treat the income and expenditure account for a non-profit making organization, because non-profit making organizations are created or established for non-profit making reasons, okay? And also they are mostly um, established to improve the welfare of their members, okay? So the members contribute some certain amount of money in the form of donations, subscriptions, okay? And also they are entitled to votes in the organization. And the major aim for the business is to not make profit, though they do engage in some trading activities that involve profit. And in a subsequent video, we're going to be treating the statement of affairs, which shows us the capital or the accumulated fund of the non-profit making organizations. Okay, so we're going to treat that also in my subsequent videos. Please kindly watch out for that. So right now we're going to be calculating the excess of either the income over the expenditure, or the excess of the expenditure over income. So let us look at that, the side, either the debit side or the credit side, which one is more. So let us calculate this. 5,000 plus 4,000 is 9,000, plus 6,800 is 15,800, plus 8,500, that's 15,800, plus 8,500, that's 13, 24,300, plus 3,000, 27,300, plus 2,000, 29,300, 29,300, plus 12,200. So let me just write that down. 29,300 plus 12,200. This will give us 005, 11, 41,500. Okay. So let us look at the credit side. Okay, 6,000 plus 12,500 is 18,500, plus 1,000, 19,500, plus 20,000 will give us 39,500. Okay, 39,500. So let us dot 39,500 from 41,500. 000. That will give us 2,000. Okay. So that will give us 2,000. Okay. So we have excess. That means the expenditure side is more than the income side. Okay. We now call it excess. Excess of expenditure. Expenditure over income. So this will give us 2,000. 2 million. So 2 million. So we have 41,500,000. So we have 41,000,000. 1,500,000. Okay. So let us just close this account. So go through. This account. Alright, so this is how to prepare your income and expenditure account. So it is not difficult. all you need to know or understand is you should be able to understand how to post from one account to another account. You should know the double entry concept, which tells you that for every transaction, every receiver, there must be a corresponding giver, and from every debit entry, there must be a corresponding. For every giver, there must be a receiver. Okay, so the receiver and the giver are the parties involved in the transaction, okay, that we are dealing with, and it is your duty as accountants to ensure that we prepare these accounts or transactions accurately in line with generally acceptable accounting principles. Okay, so this is very simple. Okay, and it is just for you to understand the concept behind the preparation of income and expenditure account for the non-profit making organization. Okay, and subsequently we're going to be making a video on where we're going to be treating how to prepare the statement of affairs of a non-profit making organization. So please watch out for that, and thank you for your time, and please kindly subscribe again to my YouTube channel, and also click on the notification bell so that you can have access. You can be notified of any video I'm going to be dropping again in regards to how to prepare financial accounts. Okay, so thank you very much, and God bless you, and have a great day out there. Bye bye.